If silver convincingly surpasses $50, then there's really just empty space. And, there will be people who will push back on my assessment. And, it doesn't really matter whether I'm right about silver going into triple digits. What I do believe is that if I am right about silver, whether it goes into triple digits or not, the silver equities will go ballistic.
Hey everyone, welcome back to Kitco News. I'm Jeremy Szafron. Now we're heading into one of the most pivotal macro weeks of the year. The Federal Reserve meets on Wednesday. Of course, markets are pricing in a pause, but with inflation easing and job growth softening and President Trump publicly calling for rate cuts, the pressure is of course mounting. Meanwhile, the U.S. dollar is rallying with this new U.S.-EU trade deal slapping a 15% tariff on most European exports, while questions remain around enforcement, especially on metals. And in big tech, well, worth over about $11 trillion, they report earnings this week, and investors are obviously watching it closely. But through this all, gold is up more than 25% this year. Central banks keep buying, hedge funds are building long positions, and allocators are asking, what comes next? Now, few investors understand gold like Dr. Thomas Kaplan. He's the chairman of Electrum Group, a leading precious metal strategist, investor, historian, conservationist. Now, he's built multi-billion-dollar mining ventures from the ground up, advised world leaders, and rarely sits down for interviews. So we do appreciate you making the time with us, Tom. Great to see you. Welcome back to Kitco.
It's a pleasure. Thank you for having me.
Of course. Pleasure is all ours. And obviously, we got to start. We talked a little bit about that macro environment we're going into. And let's start with gold first, because you've been doing this a long time. And I mean, we've seen gold rallies before, crisis, rate cuts, geopolitics. But is this the most asymmetric setup for gold that you've seen in your career across, macro positioning and even structural change?
I think that what we're experiencing is a perfect storm for gold, but I really do want to make sure that people put what's happening today and the various macros that are so supportive, providing tailwinds for gold, within context. So people will talk about real rates, people will talk about the dollar. Let me express it this way. When you look at the long-term cycle in gold, you see that the first wave, let's say from, the 1990s that took us to $1,800, for a dozen years, gold went up every single year, regardless of what was going on with interest rates, what was going on with inflation or disinflation during that period, political issues, the dollar, commodities. In 2007, when I sold my energy company in order to pivot into gold, gold was at about $550, $600 an ounce. The price of oil was around $120. And my belief was that I didn't know any longer whether gold was worth $20 or $120 because of this advent of something called shale. But I did believe that gold would give me everything that I'm looking for as a currency that could not be debased at will. And it did. So we're talking about a moment where dollar euro was 147. Where the price of oil was 120. Since that time, the dollar has strengthened against the euro substantially. I don't know where we are today, but let's just say 110, 115. And the price of oil has fallen by half. And yet gold has multiplied fivefold. There's a reason for that. It is the best performing currency in the world. It's the best performing commodity of any size. And regardless of whether there's been inflation or deflation, gold has done absolutely beautifully. Now, I do believe that what we're seeing now is essentially the continuation of the bull market that began, when gold was at around $300 an ounce. And that is to say, wave one took us from 250 to 1800. We had a correction, and now we're embarked upon a third wave. I'm not saying that so much to be referring to technical cycles, but I do believe that this wave has the potential to take us ultimately over the coming years to where the Dow is in terms of the numbers. Well, it sounds outrageous, but if somebody had said when the Dow broke out in 1980 over 1,000, or look back to 1987, 1988, when the Dow was only at a few thousand, and if somebody had said the move isn't over, the move is just beginning, and I believe that we are in an era where gold is a long wave investment. I'm not saying that we won't have pullbacks, even in the Dow. I think everyone, you're probably too young, but everyone can remember 1987 when the Dow plunged by 20%. Well, you can barely see that move on a long-term chart of the Dow. You really can't. It's a tiny blip on the Dow's way to 40,000, 45,000, what have you. And I think that there is reason to believe that gold will indeed go into the 10,000s. I didn't say this before in an interview that I gave when gold was at 1,200, and I was asked by David Rubenstein, where do you see gold going? And I said my long-term outlook from 2007 was that the first equilibrium level would be between $3,000 to $5,000. Right. I didn't venture my longer-term view because we still had to get to 3,000. But now that we have, I feel less reluctant. But the point is, if you're a gold bull, get ready for volatility, because that's just the nature of bull markets, and gold will confound you. But the long-term trajectory for gold and the implications for gold mining equities is absolutely explosive.
Yeah. Well said. And we got to get to those mining equities in a moment. On the gold topic, I mean, you're not just talking about price anymore, Tom. It seems like we're talking about those capital flow shifts too. Is gold now re-entering the financial system as a core reserve, not just a hedge, back kind of like it was?
Well, first of all, you've seen a revaluation of gold, which has essentially meant that every central banker whoever had the guts or any other anatomical parts to say, let's put money into gold, has been proven to be right. That's important. For a number of years, I've told people, watch what the central banks are doing. They are not dumb money. They are smart money. The fact that they're buying gold, or in some cases not selling their gold when other items are on their balance sheet that essentially they've been forced to purchase for political reasons. This is insider buying in a good way, in a legal way. By central banks buying or not selling, they are saying that gold is something that we regard as being an autonomous asset class. It is by definition the only financial asset which isn't someone else's obligation to repay you. So even putting aside crypto and whatever, views one might have on that, the reality is that for the official sector, gold is the monetary instrument of choice if they're given the opportunity to buy it. And they've had positive reinforcement. So if you have the official sector on the one hand as a buyer, and I think it's extremely important that even when gold went to $3,000 an ounce, the Chinese essentially said to insurance companies, you can experiment by buying some gold. They weren't saying it's overvalued. They said at $3,000 an ounce, insurance companies can buy it. That's a huge statement. Now, if you also look at the fact that the Chinese continue to be in competition with the Indians, the world's largest consumers of gold, then you have the private sector competing with the public sector over a scarce asset. And for many, many years, I've said to people, look, if it comes down to nothing but this throwaway line, whenever the Chinese and the Indians are competing over who's going to be the largest consumer of a scarce asset, you want to own some. Now, the fact is, we look at things through a very, Western centric point of view. But the East is already voting. The West will catch up. And then you'll likely see a speculative fever coming out of the East and taking the West along with it. As my friend John Paulson and I, like to laugh, when gold catches on and people get gold fever, it's absolutely extraordinary. And it could put, crypto in the dust in terms of people's passions and emotions. We're not there yet, but we will be.
You will be. And more people talking about the debasement, the fact that debt is not going away, and they're actually understanding it for the first time in a while, too. And, when we zoom out of there, any concerns about when you were talking about the East and the West? I mean, the East is really concerned about even holding their gold in the West at this point. They're bringing it more home. Are you seeing more on that, too?
Well, if they weren't, they'd be silly.
Yeah.
Putting aside, my own views on the Ukraine war, one of the big takeaways for many of the central banks was the ease with which Russia's reserves were taken away from them. Mm-hmm. I'm not saying whether that was right or wrong. Okay. I'm fine with seeing that used for Ukrainian reconstruction. But the fact is that in that action, people were shown that the gold which Russia had in Russia itself, turned out to be their most important reserve asset. And so, number one, the desirability of gold as an asset went up enormously. And number two, I would say that the rationale for wanting to repatriate your gold, if you have it in places that can seize it, makes a lot of sense. I would say that doing the opposite is probably a breach of fiduciary responsibility at this point.
I got to ask you, too. I mean, on the final topic of gold, it's very interesting because, of course, we're watching these central banks buying over 1,000 metric tons last year. They're still adding. I mean, hedge funds are positioning per the CFTC. It seems like it's the most bullish setup in kind of 4 months. But I'm almost curious because you just mentioned here, Tom, I mean, you're not looking at this small noise, what the Fed's doing on Wednesday. Your lens is far more long term. From a historical perspective, though, are we witnessing the final chapter of, central bank credibility?
Well, that has yet to be fully tested. Yeah. The next crisis, if the markets don't react with absolute confidence to a chairman of the ECB or the Fed saying, "Hey, look, we've got this." Mm-hmm. If the market continues to go down, then it's going to get extremely ugly. So if we don't have like a Draghi moment, then I think it's going to be ugly. I mean, The reality is that I don't see a way through the accumulation of debt without either much, much stronger inflation or a deflation, which leads to a cleansing out of the financial plumbing. For anyone who's interested in what's likely to happen, I would strongly recommend that you read Ray Dalio's latest book on how countries go bankrupt. I think it should be absolutely required reading, whether you're an optimist or a pessimist. As a work of history, it's a fine example of what we call applied history. But it's also a very sobering assessment of how you should be positioning yourself. To look at the entire debt landscape globally and not conclude that it's unsustainable is a mistake. And those who've chosen, let's say, like myself, or like those who are bullish on gold, to express that concern via gold as a currency or as an asset class, are protecting themselves. Are you going to put as much of your net worth into gold or silver related assets as I am? No, and I'm not advocating it. Diversification is important. But at this point, for all the reasons even if you don't want to be negative about the world, just for a lot of the positive factors, you want to own gold. But a lot's changed in the world since 2022. And I would strongly advise that everyone takes a position and just keeps it. And hopefully it's an insurance policy that never gets called. But otherwise, as an investment, I think it's the best one that I know.
Yeah, well said. And, this is against the backdrop of course, we're waiting on the S&P, some of these earnings of the Meg 7 to release. We see this M2 money supply is crazy. I mean, does this just keep going, or is it too overinflated at this point?
One thing that I've learned over the several decades that I've been in business, and exclusively in natural resources, but been in business, is that bubbles last a lot longer than you expect them to. But the caveat to that is that when the bubble bursts, the longer the bubble has been expressing itself, the deeper is likely to be the correction. And I don't want to see that happen. I think, for many, many years, that gold could go up and would multiply without any of what I called the fear factors, either hyperinflation or Great Depression, and certainly, not the four horsemen of the apocalypse. Just felt that from a supply-demand standpoint, gold could go from $550 to $3,000 to $5,000. Unfortunately, a lot of other circumstances have arisen, and we do have a global disequilibrium, which is going to require people taking a lot more protective measures and not just assuming that the good times are going to roll forever. I hope they do. Mm-hmm. I don't believe as a gold bull I need anyone to lose money in any other market. But it's a piece of advice that I do give people. And I try to avoid giving advice if I can.
But you're so darn good at it, Tom. I got to ask you, because I know you don't comment usually on what Trump's saying, but I did find this interesting because obviously gold doesn't move in a vacuum. It moves in relation to trust, and trust in what? Of course, fiat policy, the dollar. So as we talk about the gold rally over 25% this year, we also have to ask, what's the signal coming from the world's reserve currency? I mean, President Trump just signed that trade deal with the EU that puts a 15% tariff on most of their exports. Right before that, he said something you rarely hear from a U.S. president about wanting a weaker dollar to boost profits. Let's play that clip, Lou.
So I will never say I like a low currency, but you remember the battles I had with the yuan, with China and with Japan. Japan being the yen. They always wanted a weak currency. They're trying to get a weak currency now. Now, it doesn't sound good, but you make a hell of a lot more money with a weaker dollar. Not a weak dollar, but a weaker dollar than you do with a strong dollar.
Yeah, interesting. So, I mean, has the U.S. effectively abandoned any pretense of defending the dollar as a store of value? And I guess the bigger question here, Tom, is that gold's green light?
Well, I mean, how many more green lights do you need? At this point, you could ask yourself whether the traffic lights have stopped. Yeah. Now, obviously, gold will have corrections. Mm-hmm. Like the Dow had a correction in 1987 that you can no longer see. Those things will happen. And I'm just saying, something going from 250 to 3,000. Well, we're still, as I said, in the foothills of the bull market, but that doesn't mean that you won't have shakeouts along the way. Mm-hmm. Now, one of the points that you're highlighting here is the question of the dollar. First of all, for many, many years, up until relatively recently, when people would ask me in which currency they should be denominated, and that is a very important question. George Soros put it that the most important, indeed the existential question for any investor is first and foremost, in which currency are you going to be denominated? So you can, make fabulous returns, but if your currency has collapsed, those things can get wiped out and you can be in a net loss. When asked that question, I would put it like this. I would say, look, all paper currencies, for want of a better word, let's call them paper currencies, are toilet tissue. But the dollar is double ply because it has attributes that these other relative instruments don't have in terms of depth, in terms of capital transfers, the freedom to be able to move it around, its acceptance, etc. I said, therefore, as a paper currency, own the dollar, but the best currency is gold. So my advocacy was for gold and the dollar simultaneously, which some people would look at and say, well, that's contradictory. You need a weak dollar for gold to prosper. And as I just said, in 2007, when I sold my energy company, dollar euro was 147 and the price of gold was around 600. Yeah. It's a myth that you need a weaker dollar for gold to prosper. And so therefore, I don't see that as a green light. What it does provide, however, is the opportunity for those people who maybe don't have a position in gold or a small allocation to be able to give them an ex post facto justification to say, well, now gold is a much safer play because Trump is saying he wants a weaker dollar. I think that essentially right now the United States has got it wrong on the dollar. I think that we believe we're taking a lot of actions around the world, which are making people think again of whether 60% of the world's reserve currency should be in the dollar, when the United States, accounts for less than 25% of global trade or GDP. The reason for that is a function of the attributes that the United States has and the dollar has over other countries. But I think that we're steadily but surely withdrawing some of the perception of those attributes. And so I can't say against which other currencies the dollar will weaken, but I do believe that against gold, the dollar will absolutely collapse.
Interesting. We got to move on to Alaska. Before we do, the EU just agreed to invest over $600 billion in the U.S., plus energy and defense purchases. We've been talking about central banks picking up gold all throughout the year. I'm curious, if some other sovereigns are already rotating into these tangible assets and kind of, quietly front-running this shift, even at these metal prices.
Well, again, I don't believe that the metals prices are high. I think that we'll look back on $2,000, $3,000, $4,000 gold as having been a gift. So I'm very sanguine about the volatility factor, but I'm even more sanguine about the long-term trend. Are there countries which are front-running this, as it were? Of course. As to, the pledges to invest in the United States, it's become something of a performative ritual that countries, or in this case, large blocs, make enormous pledges. Let's see whether they are carried out. I hope so. Mm-hmm. Why not?
Yeah. On the strategic metals, we've been talking about President Trump. He also signed these new executive orders reclassifying gold and critical minerals as strategic. Is this a game changer for U.S. mining policy? And does it create the best kind of domestic opportunity setup that you've seen?
Absolutely. Absolutely. I can tell you that, as you alluded to, I'm just back from Alaska. And I was visiting what will be America's largest single gold mine, which is the Donlin project that we at Nova Gold co-own with Paulson Advisors. There's no doubt that the addition of gold as a critical mineral, and indeed the administration's focus on Alaska, is huge. Now, I say this not because we require a Trump administration or Republican administration to advance Donlin. The federal permitting was accomplished primarily under Obama. And, those permits, the full support of the Biden administration. Having said that, there's no doubt that we have a new tailwind that we didn't have several months ago. And again, if you're going to build the largest gold mine in the United States, and gold has been declared a critical mineral, it provides incredible opportunities to be able to anticipate ways in which this project and the infrastructure can be advanced. Put another way, when you have something that's going to be measured in decades, with a gold grade twice that of the industry average, probably equivalent to about a 2.5% porphyry copper project, long life porphyry copper project. It's huge. 1.5 million ounces a year, 1.4 million over the first 10 years. And I think with a very good chance that we can sustain that life of mine. That is a big deal for the United States.
Tom, I was just going to ask you about that U.S. because, I mean, you're kind of answering it here, but, what made that jurisdiction stand out compared to other legacy projects elsewhere? It seems like you kind of came out, not out of retirement, of course, but, I know that you're watching this closely.
Are we talking about the project?
Donlin. Yeah.
Or Alaska? Well, I have a very, very strong affinity for investing in Alaska. So does John Paulson. In addition to Nova Gold, we also own Trilogy and International Tower Hill. Obviously, with John having made an $800 million investment directly into the project, it's an incredible statement about the confidence in the project. So I haven't come out of retirement. For the last 4 years, we've been in a coma. Yeah. We had a very, very different partnership with the previous co-owner, with Barrick, than we do with John. In fact, it's completely the opposite. What made John, who was already our second largest shareholder after my family holding company in Nova Gold, what made John make this generational investment somewhat akin to the way that he played the housing crisis and subprime. He made a macro bet on gold. He's been bullish on gold for thousands of dollars, as long as I have. And he believes that Donlin is the best way to get the maximum leverage in a jurisdiction that will allow you to keep it. Alaska is already the second largest gold producing state in the United States. We're going to narrow that gap with Nevada considerably. But what he sees in Donlin is precisely what I've seen in Donlin. And I've been in the story, like he, for over a decade and a half. And that is, it will be the largest single producer of gold in the United States. It is twice the grade of the industry average, which is falling. It has a mine life measured in decades. Because of the grade, it will be one of the lowest cost operators. It's open pit. The exploration potential, the 40 million ounces that we see are only on 3 kilometers of an 8-kilometer belt. We believe that that can be multiplied. And that 8 kilometers is only 5% of the land package. 95% of Donlin is unexplored because basically, I'm speculating, I think Barrick always expected that Nova Gold will fall into its lap and never wanted to see what's there. Well, the chances that that's the only occurrence within that land package is very small. And we believe that the next Donlin is at Donlin, and both partners are committed to really seeing whether we might actually have the new Carlin, the new Nevada. But the reality is that there's never been a gold mine that started production with 40 million ounces. Even Barrick's Gold Strike ultimately reached 40 million ounces. So Donlin is a transformative event for the U.S. gold mining industry. At just the right time, when gold is giving us a tailwind, we have a partner who is 100% aligned with us. He and I were both in Alaska together last week, meeting with the governor and with our teams and the Department of Natural Resources and our native corporation partners. It was outstanding. Alaska is a fantastic place to be doing business at just the time when the U.S. government wants to be able to accentuate the development of Alaskan natural resources.
Yeah, you said it right. You're always a little bit steps ahead of most. And I'm curious here, Tom, when we think about it, is Donlin, in your view, part of a broader strategy where secure domestic gold reserves are becoming a form of almost geopolitical power? I mean, it feels like there's a long game bet on gold sovereignty in the Arctic.
I believe that is the case. To my mind, the Holy Grail for a precious metals investor is investing in great assets, by which Donlin qualifies enormously. In fact, if you look at that combination of size, grade, exploration potential, production profile, jurisdictional safety, mine life, and the rest, that combination of attributes is unique. Maybe the Sukhoi Log project in Russia, but you certainly wouldn't want to be on that side of the Bering Straits from a jurisdictional standpoint. But that's a fine classification. We're talking about the two biggest gold mines in development in the world. No doubt, from a national security standpoint, if you look at the strategy which has been employed by China in not only buying up all of the gold it produces, but also being the world's largest importer, I think that there is a very strong sense that the Chinese are understating their official reserves. They can do so technically by splitting them amongst SOEs or government-owned corporations, not to mention the central bank. I think that one day if they were to reveal what they have, they would certainly rival, if not significantly surpass, America's gold reserves, which are officially the world's largest. America is a beneficiary of rising gold prices. Ergo, America is a beneficiary of any remonetization of gold. And in that case, those assets that are in the United States are going to achieve premium valuations. So we are ahead of the curve on this, whether it's investing in gold or in silver. We've placed an entire emphasis on only North American assets. And of course, the United States to us is the safest jurisdiction in the world for a gold mining investor.
Now, I know you can't say it, but it kind of sounded like it to me that Donlin is almost less as a mine and more as a reserve tier asset in a world rethinking the foundations of monetary trust.
Well, if you look at just the reserves that Donlin has, and that's discounting any of the comments that I've made on its exploration potential, you'll see that it takes up a very, very large percentage of the reserves at Fort Knox.
I got to ask you about gold miners because, I mean, it's a natural kind of way to segue into it. I mean, they've lagged, obviously, physical gold again, even with strong margins, leaner balance sheets, and rising prices. Some stocks are moving, but why the disconnect? I'm just curious. And where do you see the large, the biggest opportunity right now? Is it just an M&A? Are you looking at the juniors?
Well, look, our stock in trade is taking companies either from generative exploration or through taking control of companies all the way through to production. Sometimes we get taken out before we're in production because we have assets that are our targets, which are category killer assets that anyone would want to own at a price because they can move the needle. So, for a generalist investor, you normally have waves of interest as a bull market gathers for a variety of reasons, because gold, until relatively recently, despite its very, very strong performance, was still viewed as a barbarous relic. Well, I don't have to make the macroeconomic argument for gold any longer. And one of the reasons is the crypto people did it for me. I used to have to spend 90% of my time explaining why it was important to own an asset that wasn't someone else's liability, or why you want to be able to have a currency that can't be debased at will. By calling itself Gold 2.0, for example, the Bitcoin advocates removed my necessity to make that argument. And I don't view us in competition with crypto. We can both absolutely prosper in a similar environment. I am, conservative In a certain sense, a political philosopher once said a true conservative is someone who prefers present happiness to future utopia. I'm really happy with gold and with silver. But I don't need anyone else to lose money. And in terms of absolute performance, I do believe that those who own the equities, particularly related to gold and silver, will keep up, if not outperform, any other asset class. The reason why they've lagged is a simple one. It's not because the underlying products that they produce are underperforming, although there's, of course, been a legacy of capital misallocation by the gold industry. But that sentiment is going to change rapidly. First of all, you do have companies which have shown excellent capital allocation, like Agnico, for example. So they've shown this can be done. And so generally speaking, in a bull market, you have the people first buying gold or silver. Then they buy the largest producers. And then they go into the highest quality in the development space. And that's where we're focused. We want NovaGold, for example, to be the go-to stock in the gold development space, which is what we were going into the acquisition by Barrick's management, or I should say the acquisition of Barrick by Randgold's management. After which point, for a variety of reasons, we went into stasis. But we were the best performing gold development story of size, certainly one of them in the GDXJ. I believe that we're going to recover all of that lost ground. We were a $12, $15 stock, and that we're going to multiply to reflect the fact that gold isn't at 12 or 1300, but at 32 or 3300, and to my mind, going a lot higher. So when you look at NovaGold's attributes, all of those things will allow us to have greater leverage. But the important thing is having the leverage in a place where you can keep the fruits of that leverage. So I know, I'm not, squeamish. I made my bones in Bolivia, Zimbabwe, South Africa. I sold the Kibali project to Randgold and Anglo, that's now part of Barrick. But I believe that era is over. I believe that you want to be in great places, great assets, with management that's been there, done that.
Yeah, jurisdictional risk, it seems to be, some people say underpriced, some people say overpriced in the market, but it's definitely back in the headlines.
Look, when I started to reconsider jurisdictional risk, it was when I was quite possibly the largest holder of mineral rights in the Islamic world. We were one of the largest landholders in Guinea, Niger, Cote d'Ivoire, Mali, Burkina Faso, Senegal, Congo. I was the largest holder of mineral rights in Pakistan. At a certain point, however, I realized that the world was going to change and jurisdictional risk was going to go from maybe number 10 in terms of risks that miners faced to number 1. Because after all, a mine is just a hole in the ground surrounded by people who get more and more envious of you as you make more money from their national patrimony. And unless you're in a country where the rule of law isn't a novelty, it's an issue. I subscribe to what I call not the golden rule, that's another thing, but, the sleeping well rule, which is to say, it is important. For me, if I can go to sleep at night knowing that what I thought I owned the night before, I still own in the morning with absolute conviction, I can hold something forever. So for me, a 15 or 17-year hold doesn't mean anything if I know I'm in the right place and the market will come around to my point of view. Hence, NovaGold, I believe, is going to be witnessing a renaissance. But conversely, I do believe that those who are stuck with a hole in the ground, in places where the rule of law really doesn't have very much meaning, where you have, either dodgy governments or insurgencies, it's going to be a problem. It's existential. And the tragedy is a gold investor who gets the metal right and then has the asset taken away, which is what we're seeing in more and more places. Basically, I subscribe to Woody Allen's philosophy. I'm not afraid of death. I just don't want to be there when it happens. And so someone who, as an American, certainly profited as much from the go where the gold is mentality, the frontier spirits, essentially withdrew to Alaska, Idaho. I'm fine with Mexico so long as NAFTA or whatever it's now called, survives. But clearly, the United States is where you want to hold generational wealth.
Yeah, well said. And great tips, too, for the average investor just listening there. I mean, it's always nice to see the long-term view. Listen, Tom, our time always goes too fast, but I got to stick to silver because, I mean, we're back above $37. We got these strong ETFs in a tightening physical market and, rising investor interest in energy transition metals, but mining supply kind of remains constrained. Is this still the strategic metal of the future in your view? And what would it take for the market to reprice silver more like a critical industrial asset, than a forgotten monetary metal?
Well, as I always say, silver is schizophrenic. It has two personalities, but both of them happen to be quite charming. So you have that industrial aspect for which silver is clearly the most competitive because of the fact that it is the most reflective, the most malleable, the most conductive of all metals. Its competition is usually much more expensive than substitution. So there's no reason not to own silver if you are a believer in the energy transition. However, as Milton Friedman once put it, the major monetary metal throughout history isn't gold, it's silver. And so what you see is in an economic crisis, because of the industrial applications, you'll sometimes see silver take it on the chin, like a base metal. But as the measures that are required in order to dig out of the financial crisis come to pass, silver then catches up to gold as a monetary metal and outperforms it. So on my last visit with Kitco some years ago, we were talking about the silver rally, which had taken place. And I said, those people who are investing in it like it's a meme stock are wrong. However, if they hold the silver, it will surpass where we are and they will make a lot of money. So I said, the reasons they're buying it are not applicable in my view, but there are so many more reasons by which they will be proven right. And I said at that time that I have no problem seeing silver in triple digits. For that to happen, the industrial aspect plays a role because as people come into silver as a monetary metal, the industrial buyers will still have to continue buying it. And so you will have this lovely mutual reinforcement of the financial buyers continuing to buy it as it goes up and the industrial buyers just, fueling the fans, or depending on how you want to view it, vice versa. So I do believe that silver has the potential to be a bubble. And there's nothing irrational about buying bubbles early. But the one caveat that I always make, people have to understand it is by definition, as it is schizophrenic, more volatile than gold. So if you're going to own precious metals, I think you do want to own both. Silver is the warrant to gold stock. So just keep that in mind.
Interesting. Okay. Still a little bit early. Still 3 digits? Like, are we still going to see silver past 100?
Well, let me put it like this. It's the same as I felt about not talking about, gold going beyond 5,000 until it hit 3,000.
Right.
If silver convincingly surpasses $50, then there's really just empty space. And, there will be people who will push back on my assessment. And, it doesn't really matter whether I'm right about silver going into triple digits. What I do believe is that if I am right about silver, whether it goes into triple digits or not, the silver equities will go ballistic. And we have 2 private companies that we're planning on taking public next year, each with hundreds of millions of ounces, if not beyond that. And we see that that has the potential to outpace anything in gold. So for us as investors at Electrum, our focus is on NovaGold. We've had an excellent experience by selling one of our silver mining stories, Gatos Silver, to First Majestic, which has done extremely well and has great leverage. And we have two others that in the silver space that will go public. So, as I said, like a true conservative, we have a lot of present happiness. But perhaps with silver equities, we'll see something utopic.
Okay, so I'm hearing we're still early. I mean, if you're looking to IPO, it means we should start to be looking now too.
If the thing about silver assets, really great silver assets, is that they are very, very scarce.
Yeah.
And we only focus on those that have very high grade and very, very large quantities, which is basically sort of our stock and trade as we do, in gold as well. Our attitude is either go big or go home. As a team, we've been together for decades, but we're not traders. We take a few bets and we're willing to ride them forever.
Yeah, interestingly said. Okay, well, we'll sum it up. I mean, for this powerful case that you've made here, I really appreciate it. I mean, for gold as a reserve asset, silver as a strategic metal, and the reordering of almost the global monetary map. If we take a step back, last question to you, Tom. I mean, with central bank stockpiling, governments reclassifying the strategic, the long-term investors like yourself doubling down in this precious metals market. And for investors watching now, those who want to position for the next 5, 10, 20 years, what's your final message?
Unreservedly, you must own some gold in your portfolio. We express the gold trade primarily through gold-related equities. Our favorites are obviously in the development space. And to us, Donlin, NovaGold's partnership with Paulson Advisors gives us the equivalent of the Holy Grail. The biggest, the best, and in the safest place. And for a variety of historical reasons over the last 4 or 5 years, the ability to multiply and just get back to where we were in 2021 when gold was much lower. So I am extremely positive about NovaGold's future. And in the silver space, as I said, we've had a wonderful experience with Gatos Silver, which was one of the best, if not the best, silver performers, taken over by First Majestic and continued in its upward trajectory. And then, of course, the companies that we're taking public. So I don't know whether, we are an example to follow or a cautionary tale, but I believe, and this is where my family's money is, that from a defensive standpoint, and because we've been in the business long enough, we've had 100x returns in silver mining, in PGM mining, in hydrocarbons, which was our biggest score, right, 100x as well. We're very comfortable with those kinds of risks and rewards. So that's our business. So we have a disproportionate amount of our wealth in gold and silver related assets. But I do believe that without even talking my own book, and admittedly, I do love this book, and particularly the chapters that come next. But without even that, I think everyone should own some of these assets, whether it's the metals, the equities, or a combination thereof, depending on your risk profile. But really, only as a product. Don't do what I do. Do what I say here, only as a product of a diversified portfolio. And I'm not saying that, as a disclaimer, it's just you have a greater ability to hold an asset for the proper duration. That is to say, for when the world comes around to your point of view, if you haven't bet the farm on one thing. I find that if you can go to sleep at night, as I said, knowing that You've made the existential bet on which currency you want to be denominated in, on which jurisdiction, therefore, you're comfortable with, but also because you've spread your risk and can't be shaken out. You don't want to be the proverbial weak hands that gets shaken out when you have that downside move, and then everything that you hoped and dreamed for happens, but you got out and you were paralyzed. Yeah. So if you haven't a position in precious metals or something related to it, my recommendation, buy some now, hope for a pullback, buy another third then, for example, and then when you're in the money, buy your next third. And just be very, very thoughtful about it. Be prepared to mean it when the pullback happens and you can buy on weakness. Mm-hmm. This is where you have to have your Warren Buffett moment. And Warren Buffett would always say, swing when you see a big fat pitch, and then hope that the investment goes down so that you can really back up the truck. If you can actually adopt that attitude and not be whistling through the graveyard and convincing yourself and then are going to be paralyzed or panicked, then just don't bother with the experience. Put yourself into T-bills.
T-bills. Keep it light. Sound advice. Dr. Thomas Kaplan, chairman of Electrum Group. Of course, we can check out Nova Gold as well. That trades on the NYSE. Thank you for your time. It's always a privilege to have you with us. Appreciate it. Thanks so much, Tom.
The pleasure and the privilege is really mine, and I wish you and your viewers a great summer.
Thank you so much. Let's keep in touch. They're going to want to hear from you soon, and we'll be, of course, following what's happening in Alaska. Thanks again, Dr. Thomas Kaplan, chairman of Electrum Group, joining us. Thank you, sir. And for more expert interviews and macro coverage, subscribe right here to Kitco News. Let us know your thoughts in the comments. We'll be tracking every move this week, from the big Fed to the big tech to the next big gold move. Thanks for watching. I'm Jeremy Szafron. See you next time.